Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Paul Krogdahl and Ville Sontu. This is Fintech Daydreaming.
Welcome back, everybody, to yet another episode of Nordic Fintech Highlights. I like the way that rolls off the tongue, Nordic Fintech Highlights. As you know, this is the culmination of Helsinki Fintech Farm and Fintech Daydreaming getting together to review what has been happening in the Nordics around the fintech scene, looking at the newsletter that Helsinki Fintech Farm puts out every month. So we will be looking at what was interesting and exciting last month on the fintech scene. But as always, I am Paul Krogdahl. I'm going to be your host for this episode. We jump backwards and forwards. I may, sometime in the future, maybe Janne should be the host of one of these episodes, but we'll see if we trust him to take that responsibility as things move forward. But I can't do this alone. I obviously have Janne and Ville with me, and Ville being my brother from another mother and my fintech crime nerd. How are you, my friend?
I'm good. Instead of complaining about the weather, I'm going to complain about the amount of work that I have right now. So it's this spring is proving to be one of the craziest in my career in terms of the amount of things. First of all, moving in the market, and those things also triggering a lot of work in my day job, so to say. So yeah, complaining about work, nothing new. But other than that, doing good.
Well, serves you right for being such a smart ass. That's all I can say. I mean, if you want to go around being a thought leader on all things banking strategy, digital euro, and a fantastic cook, then you've only got yourself to blame. I mean, what more can I say? Just look at that fantastic job you have at that big Nordic bank that you work at. So I'm not going to give you any sympathy at all.
Yeah, I guess you have to sleep with the bed you make, right? So there we go.
Yeah, I'm glad you said that. I thought you were going to say sleep with me, but I'm glad you didn't say that either. That would have been horrendously bad on this live, unedited, public viewing of the world. So no, we are here live for you all. But I'm also going to say that I'm very busy as well. But I'm busy on a slightly different level. Yes, work is stacking up and there's a lot to do, lots of exciting stuff. But as all of the listeners know, my book is soon coming out. My book, Rip Out the Core, which is all about progressive modernization of core banking systems. It doesn't just have to be core banking. I mean, anything that's progressively being modernized in banks these days. I just received this morning the final copy edit from the publishers. So I need to go through that this next couple of days and look at what they have edited, what they have changed, where they have misunderstood me, and correct it as a final version before it goes to final typeset and then gets released in July. So we are rapidly getting there, and I'm starting to put out feelers to see who wants to sponsor my launch party. So if there's any larger companies, corporates out there that think this is an interesting subject and potentially want to be connected to the book launch, then reach out, let me know, and I will gladly see if we can find a mutual agreement where we can benefit from each other. But yes, end of July will be the launch of the book. But that's not the focus of today. Today, we're going to be talking about cool and interesting news from the fintech scene for the month of March. Yes, March. We're in April, so March. Yes, you see my working so hard, I'm lost track. But Janne, how are you, my friend?
I'm very well, thanks. And yes, you might see from my background, we did not decorate our office again. I'm currently at the Northeast Finland, working now from a woodlog cabin, having kind of an extended Easter holiday, but yes, I have a bit of the same issue, quite a lot of work to do, so I can't just go around skiing. I also have to sit on my laptop quite a few hours a day.
Northeast? I've seen it.
Yeah,
drones lately.
I was just about to say, are you skiing and looking out for drones at the same time?
Yeah, absolutely.
But tell us, Janne, the newsletter has gone out. So what was the highlights from last month in the scene of Nordic Fintech?
So yeah, quite the usual track on our overall level. Not super much activities, just a few funding rounds. Not surprisingly, AI was involved in the funding rounds. On the partnership side, again, a lot of stuff around payments, around the payment infrastructure. But then there were quite a few M&A activities. So many transactions. Also, we can see the smaller banks are consolidating still. So that trend keeps on going quite strong. And then a few interesting launches. We can dig into those today also. But maybe outside of the Nordic scope, quite interesting news was a couple of weeks back when Revolut announced their annual figures, and already last year they did some pretty impressive numbers, but now they kept on moving forward. Was it, if I remember right, was like 40% growth and 30% profitability. So that's quite an extraordinary number for a bank, at least for a bank which was doing like a truckload of losses couple of years ago still, and burning so much VC money. But now the really tables have turned, and we can really see the big neo banks, especially Revolut, doing some really impressive results.
I know it's not really related to the Nordics, like you said, but I'd actually be interested to see some of the breakdowns of the numbers from Revolut and where they're getting majority of their numbers or monies from. I mean, it is big money, but is it coming from customer acquisitions? Is it coming from some of the other services they're delivering? I know, Ville, you're a subscriber to their luxury, I am a very important person status in Revolut. I'm wondering if that subscription-based model is where they're getting most of their revenue from. Obviously, their cost of operation is completely different from the larger legacy banks, so that's going to make a big difference as well. But still, I don't know, Janne, if you've got any breakdown on the numbers to show where majority of their profit is coming from.
What I have a little bit, I should maybe dig in a bit deeper, but it's still the cards and interests are doing pretty big stuff there. But now they have also expanded into the wealth management, the trading and commissions there. I'm not even sure like how much are they actually making money from these monthly subscriptions, but yeah. Like geographically, they have been very much growing in the US market, but now they have also announced in Finland and the Nordics that they're looking to have 1 million customers in Finland, and they have hired people here. So they're clearly also looking into these, more saturated markets when it comes to digital banking services.
Yeah.
And any view, Ville?
Well, Revolut clearly is now activating here in the Nordics, like you mentioned, Janne. They announced their targets for all the Nordic countries, which is quite ambitious considering where they are right now. They are super active. You're starting to see them be more active in terms of integrating local infrastructure. So it's just a matter of time before they are kind of a full service bank also in these Nordic markets. The interesting part will be if and when they will start to offer house loans, i.e. mortgages, because that's, like we discussed in a previous episode, is a chance to disrupt the market because, again, the way you basically buy a home in the Nordic countries has remained exactly the same for the past 100 years, almost. A bit of an exaggeration, but still. And the current lenders, they don't see a need to change that picture at all. I think Revolut might have a different opinion about that. So that, and then combining with the fact that Revolut is really focused on the SME segment. It's easy to say that we have many banks who have been trying to focus on the same thing, but looking at what Revolut Business can offer in terms of all the way from payment acceptance into collections, everything. That full portfolio of services is quite impressive. So if they get the local infrastructure integrated, they're going to be a massive disruptor in the Nordic market.
I agree. They also seem to have a slightly higher risk appetite than a lot of the Nordic banks as well. So particularly in the SME space, they're willing to gamble a little bit more. and it's potentially paying off. But we are diverging. We were talking about the Nordic news, even though you could to a certain degree say that this is part of the Nordic news, as they are trying to increase their footprint in the Nordics. But back to your assessment of the market in the Nordics, Janne, you said there's been some mergers and acquisitions. Do you think that's being driven by a continued economic problems, or is this normal for the Nordic market?
Yeah, I think in terms of like banking and digitalization, it's of course a matter of scale. So less banks and more scale. That's what the trend has been already for quite a while, and it seems to continue. And then again, maybe on the fintech side, it's more about getting more muscle, acquiring interesting technology, but then bringing the muscle and scaling it up as well.
Okay. Well, enough of looking across the landscape for last month. As always, we look into the news articles and look for something that catches our eyes individually and take a little bit of a more deep dive into them. And I think we're going to start with you this time, Ville, if that's okay.
That's okay. Let's go. So, out of the March news, again, it was to be fair, it was a quite limited amount of news, to be honest. We have not that many headlines to choose from, but I did finally pick an interesting one for my own selfish reasons, and you will find out soon what I mean. Because I selected the news about the Norwegian bank DNB launching a buy now, pay later solution for businesses together with the Norwegian fintech called 2. So that's the number 2. And while that headline might not sound that interesting, but it really is the business to business element of this that actually makes it a little bit more interesting than a classic Klarna BNPL expansion story. And the reason why it's interesting is that, well, first of all, the way it works is that if you are a business and you're buying from a business, you can then choose to pay with 2, and again powered by DNB in Norway, for example. And then by doing that, you will do a very quick onboarding, so you don't need to be a 2 customer. When you do that, the onboarding only takes, according to their measurements, 30 seconds. And it's based on the company name. So if you just type your company's name, they will look for the public records, your bookkeeping information, whatever they have as sources, and they will make a credit decision then in less than a minute. They're of course saying that this is fantastic AI-powered voodoo magic that they use in the background, and of course that makes it a little bit hypey as well. But the interesting part here is that once they are onboarded in this way, then these businesses can always come back, and they can just pay with one click and choose to pay in 30, 60 or 90 days for the purchases. The buyers don't pay anything extra for this service, so if they can choose to do 30, 60, 90 days payment with no interest as long as you pay the invoice in time. And then the seller, basically the merchant who is selling, they will get paid immediately for the entire sum. And they don't actually disclose how much the fees are, but the assumption is that they're anything between 4 and 8% of the price that the merchant pays, but it's still worth it for them. In many cases, when it's first of all a conversion game, so again you're able to convert sales quickly, and then you get paid immediately, and you don't have to worry about collections or invoicing. Those are quite expensive processes for merchants to do, especially in B2B space, and you don't have to chase these buyers for your money effectively. So it's a kind of a win-win for all sides of the equation, and that makes it quite interesting. Now, why I chose this story specifically is because some of you might remember we used to have a blockchain-based trade finance solution called WeTrade back in the days. And both you and me, Paul, we were actually building that in the very beginning. And if you look at what WeTrade was trying to do with the blockchain, is actually quite much like this. The value proposition was that if you are an exporter or a seller, you will get paid immediately as long as you make the payment obligation or the kind of trade agreement on the WeTrade system. in its own funny way, this BNPL actually is achieving that exact same value proposition, but with much more conventional approach of a centralized cloud-based platform and doing it much more effectively. Of course, WeTrade also had bigger ambitions. I mean, they were from the day one. They wanted to launch in the entire European Union with multiple banks, and again, 2 only works for now in context of DNB, for example, in the Nordics. But their ambition for sure is to onboard more and more banks globally, and then allow this BNPL to happen even cross borders. So it's funny how these things seem different, but they're actually quite much the same. But Paul, I mean, everybody knows that you hate buy now, pay later. But how does this business to business context sound like to you?
I like the way that you position it as I hate being buy now, pay later. I suppose to a certain degree I do, but it's more around the consumer protection element of buy now, pay later that I'm not too happy about. And buy now, pay later does make sense when you're looking at the many money purchases, right? You're buying a new TV or something else. My concern was starting to come when it was buy now, pay later for groceries, or buy now, pay later for 3 chocolate bars and all that sort of stuff, right? So, and also the fact that buy now, pay later didn't have stringent enough checks to make sure that the individual actually was suitable to take on a buy now, pay later capability. You know, in the early days, you could have ended up with buy now, pay later across 15 different vendors and have no ability to pay it back. And I suppose when you look at this from a B2B perspective, the dynamics change a little bit. But also at the same time, if someone is not very good in managing money, even if they're running a company, it doesn't mean that they're very good at managing money either. So is this a way to help companies do better in money management? Or does it help them to actually end up in a worse situation? Particularly when you're saying that the check is done so quickly. The first thing that I thought of when I read this was, you know, they're doing it based on the company name. Well, based on my experience, you can actually have multiple companies with the same name. It's just that they're working in different industries. You can't theoretically have 2 companies with the same name in the same industry, although maybe potentially you can. But so how does it work with that? If it picks up the wrong company, there must be some checks along the way. And I'm assuming that it does more than just a quick credit check. It must do some background checks to make sure that the person, I hope, that the person of the company, I'm assuming we're talking B2B here, potentially also with SME. So the one-man plumber down the road buying tools from the local provider, does he have the cash flow to be able to pay this? And I suppose that being able to move that cash flow a little bit helps. But if he's got a cash flow problem, is he going to solve that in the first 30 days or 60 days? The other thing I didn't quite figure out either is whether this was just a delay payment or it breaks up the payment for you as well and gives you the capability, like a lot of buy now, pay later offerings do, where they say you can pay over the next 3 months and it's 3 installments or something similar.
Yeah. So when they say that it's 30, 60 or 90 days, which means that it's either 1, 2 or 3 installments effectively. So you are able to break it in 3. I suppose there's no limitation there as long as the credit line holds. They do have a verification, so you're able to search your company name, it will find it, and if it goes through, then it's verified. They actually don't specify how they verify, but I would presume, especially since this is Norway, it has to do with the digital identity of the owners or the underwriters of that company. So again, there is this kind of second loop verification. Then they say that they open up a credit line immediately for 90% of buyers in the current setup that they have. So they have launched in multiple markets already, including Spain, for example, and they are processing a lot of merchant payments as we speak. DNB is just the latest expansion into their network. So again, they have pretty good statistics in the approvals. They don't publish how much they actually do credit losses with the partner banks, but I would presume that it's not that bad, considering that they are kind of verifying the businesses with their kind of magical AI tool, like I said before. But
let's be honest, it comes back to what we said a minute ago around SME banking with Revolut. It all comes down to risk appetite, and if you're willing to take the risk, then you're gonna generate business out of it. There's always going to be some losses, and you weigh up. But I'm thinking more from the consumer perspective. You know that I tend to have quite a focus on consumer protection, consumer rights, and financial well-being and financial literacy. So all of these things come up. But for you, Janne, you have been running and looking after Fintech Farm for quite some time. Does this ability to have buy now, pay later for an SME company seem like a great idea to you? Is this something you want and need?
Well, yes, because quite often I feel like our customers are doing buy now, pay later without even like doing it officially agreeing on doing that, because like generally the invoicing on the B2B side as an SME company, it's just, depressing. Like so many times something's wrong in the invoice and the payment terms are so long and still they're not paying on time. So that's just a disaster. And I've been really waiting that someone on the fintech field would actually like fix this, how to get the invoices right and how to get the money on time. And if someone has an innovation to be a middleman, obviously we have a lot of like factoring companies and things like that to work in the middle, but this is maybe more a bit like a native digital solution, and yes, I am open for all kind of solutions that would help, especially the position of SME companies in terms of getting their finances right.
Yeah, I think the key here is that this is embedded in the merchant acquiring proposition, so really it becomes a payment option at the point of sale, and because of that tight integration, they're able to do it end to end, digital, and the innovation really here is that you remove a lot of friction, a lot of traditional middlemen when you get rid of the paper invoice or the PDF invoice in this case. So you basically, it just goes straight to the platform. They do the collection, they do the payout, and it's just very, very efficient. And I think this is the way to do it. Having done a blockchain version of this, I think this is better.
Absolutely. I'm thinking a little request to pay type capabilities here as well in the future. So interesting news. Let's see where it goes. And I'll continue sitting on the fence on my views of buy now, pay later. Janne, what news article did you pick up on this time?
Yes. So again, regarding SME finance and the M&A happenings, what we had listed. So Ukko.fi, they got acquired by Finago. And Ukko was originally a light entrepreneurship service where individuals like freelancers could invoice for their work without having their own company. And later on, it has expanded to provide services to actual SMEs, small companies, starting with invoicing services, accounting, and so on. And later on, they have also expanded to cards, for instance. So it's getting more from like very niche accounting thing to also sort of like a neo-banking thing almost for SMEs. And then again, Finago, that's a big accounting and tech house. Actually, last year they already acquired a few competitors from the market like Heroes and some other companies as well. And they are also doing collaboration, embedded finance collaboration with Alisa Bank. So they are also growing quite heavily, providing more and more services to different segments for business customers. And this is of course interesting news. What will happen to Ukko? Reportedly, they will stay as a standalone firm, but there are of course a lot of possibilities now where they are part of this big software group. So maybe they could even start also going to the financing services through the partners like Alisa, what they have. But generally, like now we get almost monthly back to this SME finance topic. So that's an underserved market. And still the traditional banks are barely visible there. But then again, we see a lot of neobanks and accounting firms doing a lot of new openings on a monthly basis. So yeah, very interesting news.
Very interesting news, but just for a clarification for Ukko, I mean, we're not even talking SMEs, are we? We're talking gig economy. In fact, even lower than gig economy. Like you said, this is individuals that potentially themselves don't have a registered company or a company number, using a service from a company that takes a cut of the payment, right?
Yeah, so that's where they started from, the gig economy, but now they have expanded to toiminimi companies and then even LTDs in Finland. So they do have pretty real solutions for small companies. I'm not sure what's the revenue share currently between the actual companies and the gig economy, but they have been growing all the time more towards the SME finance.
Interesting. Ville, your take on this?
Ukko is one of these companies again in Finland that are very well known. I think these kinds of platforms for micro and small entrepreneurs that provide the business services and the accounting services in a very tight package are very much in demand. And again, consolidation in this market is inevitable. So I think they will gain scale by doing this type of merger, even though they are not directly merging with any other service at this point in time. But it's the portfolio of services that provides maybe scale for Ukko in the future as well. It's a very competitive space. So there are a lot of international companies that are competing for that same attention. Obviously, Ukko has its own advantages because they are natively Finnish, so they're able to serve the Finnish market. I'm interested to see if they will expand now internationally, if they're able to kind of start to grow their business, because they kind of become a little bit maybe too big to just stay in Finland. Now, Ukko has done a couple of interesting embedded finance cases that I've been monitoring. So, for instance, they offer the embedded Ukko business account for companies or individuals, the individual entrepreneurs that go to be Ukko customers. And I don't remember the exact number, but I believe that the CEO of Ukko said that out of their new customers who need a bank account, they choose like 60 to 70% or even more choose the Ukko business account because it's just one click opening of the account and it's immediately available for you as an entrepreneur. You can of course still link your existing Main Street Bank accounts there too, but still, because it's so easy to get the Ukko account, people choose it overwhelmingly when they onboard. And the embedded story is interesting because it's actually offered by a French fintech called Swan. So you actually get an IBAN number, which starts with an FR instead of FI, but nonetheless tells you all about the power of embedded finance when you can serve these Finnish customers from France as well. So yeah, it's an interesting story to kind of follow, and all the best to Ukko.
Actually, a personal story connected to that. Now, something just went pling in my head because you mentioned the IBAN number. For my book, I needed to have the artwork done for the front cover. I had an idea built up, which I had done with the publisher, and we'd used AI for it. But for one reason or another, and I couldn't quite get to the bottom of this, the publishing company told me that I wasn't allowed to use an AI-generated image for the front cover under any circumstances. So I had to get an artist to do a interpretation of the artwork. And this was an individual that had this as a side gig that I picked up. And you're absolutely right. The payment I made was to a French IBAN number. So, absolutely. And I fully support it because I ended up with some nice artwork for the front cover of my book. But back to the story, I agree with you. I think this is an interesting development. I think this potentially opens up for moving to other geographies as well. There is some differentiations here in tax liabilities and tax processes, particularly when you're looking at individuals that potentially don't have their own corporation or their own company set up. But most fintechs tend to find ways of dealing with local variations as they expand into different regions. But as they are being now, quite into this bigger bubble, I think that's going to change as well.
Yeah, and a small addition to that, so yeah, like what we discussed before, so there was actual discussion about, Revolut business seems to be a great solution, but people seem to be like waiting to get the integrations to the local accounting software. So that's a very, like, even though you have a great global company, there are still local things to do. And then this IBAN thing has been something that some parties or customers might be kind of discriminating. Hey, we don't want to pay money to your Lithuanian or French IBAN number and so on. But I think that's also something that is going to change. The neobanks are more and more looking to have the domestic IBAN numbers. But yeah, SME finance and accounting seems to have a lot of like local characteristics which are not like so easily scalable just around the Europe. So it needs some local work as well.
But this potentially could be one of the areas where Revolut will actually find that they get some back pressure. One of the things that I've noted as a foreigner in Finland is that some capabilities are very nationalized almost in Finland. One great example is eBay does not exist here. It's predominantly done through a Finnish equivalent, and I forget the name of it, Tori. Right? Yeah, Tori. eBay just never managed to get the footprint, even though they're a global player and recognized globally. They just never got the market growth in Finland because the Finnish people wanted to use Tori. Tori is Finnish and they continue that way. You might find that for Revolut, they're going to hit similar problems. They're coming in as a foreigner with a foreign market proposition. It might not actually grow in Finland in the same way as they are hoping, but let's see. We diverge again.
Well, I mean, again, let's see. Revolut already has 1.5 million customers in Sweden. How active they are, we don't know. But again, they are able to kind of at least get the numbers up quite nicely. But so yeah, the world moves on, and ultimately even Revolut will get the local IBAN numbers, so you don't have to be paying into Lithuania whenever you're dealing with them. But yeah, it's interesting to see how this world develops and converges ultimately.
Yeah, but again, eBay is resident in Sweden. You get eBay in Sweden, you just don't get eBay in Finland.
That's true, so but Sweden also has Blocket, so it's kind of the equivalent there.
Very true, very true. But we diverge. As for me, I picked up a news article that I thought was interesting. I've covered variations of this in the past. And this comes down to Volt. Everybody in Finland knows Volt as their favorite app for ordering food when you're being very lazy, sitting on the sofa on a Friday evening, not wanting to cook any food, not knowing quite what you're going to do, watching on Netflix. You say, hey, let's order some Volt. In actual fact, I think Ville, you and I have in the past ordered some Volts here and there. Yeah. Well, Volt is expanding now in the summer of 2026. They're moving into the benefits market. They are launching what they're calling Volt Benefits. They are basically taking on a direct competition against Airpassi. And we've talked about Airpassi multiple times in the past on the podcast. They are a growing fintech that have started in this space. So if you look at Airpassi, they've started with benefits and potentially moving away from that. What Volt is doing is they've started with home delivery of both groceries and food and other things. And now they're expanding that into the benefit space. The interesting part here is obviously Volt, just like Airpassi and the others, Volt has already got a captive audience, both from individuals that are using Volt, but also the vendors that they are connected with that are providing the food, and they have the drivers, etc. Now, Volt are saying that they're going to start with, let me get this right, it was lunch, sports, and culture benefits initially as a starting point, potentially looking at moving on from that. Another thing that they're also going to do, which Airpassi doesn't do, Volt is going to also potentially issue a plastic card, a physical plastic card. So if you're a part of this scheme, the Volt benefit scheme rather than the others, you could end up with a plastic card. Do they distinguish themselves much from Airpassi or some of the others? One of the areas that they are going to distinguish themselves from at the beginning is that they're saying that to the merchants, they are not going to charge them anything for the first year. So one of the things that we have pointed out in the past is that Airpassi does charge a fairly hefty percentage fee to the merchants. So when you as a individual go and buy lunch at a restaurant that is being paid for through Airpassi, the restaurant actually takes a fairly sizable hit on that payment. And so do the gyms and everything else where you're potentially using Airpassi. Volt is saying that at least for the first year, they're going to charge 0%. So they're really really going here for undercutting the Airpassi and everybody else to try and get that growth. I think the other element to this is Airpassi is very strongly recognized and have a very strong footprint, particularly in Finland, around a lot of the large corporations already. I mean, I get Airpassi through my work. I know Ville, you do. And I think most people in Finland are quite used to the fact that Airpassi is the preferred platform for benefits. It will be interesting to see how Volt manages to step into this space and how they're going to manage to grow this. That's interesting, and it'll be interesting to see how this progresses. Volt are also saying that they will start in Finland. I did not see in the announcement whether they are thinking of looking at other markets. It's almost like they're using Finland as an MVP test bed for this, and let's see how it grows out of that. Janne, to you again. I mean, looking after Fintech Farm, would you consider using Volt as the benefits provider for people working at Fintech Farm?
Well, yeah, why not? Like generally regarding the business case here, it is a huge job if you launch a new platform like this to get the consumers or the users, also companies, but then the merchants. So starting from scratch would be a terrible job, but then Volt has this position in the market. They are in the loop with pretty much all the restaurants. So why not start building this, and why not using it ourselves as well? But yeah, regarding Volt, otherwise, so I don't know if you know, but when they first started, they planned first to be a neobank, and then they pivoted into something more simple. So first it was just ordering and paying for the food and picking it up from the restaurant. Then it became a food delivery company. But during the years, they have actually taken a few more steps back towards the financing side. So besides this news, so they also have something called Volt Capital, which is an embedded finance solution where they provide financing for the restaurants. So basically, big finance institutions can invest through their platform and do financing for the restaurants. But generally, now after this news, I would like to officially categorize Volt as a fintech company. So, and of course, because they have already reached the unicorn status some years ago, I would like to say that it's the Nordic Fintech unicorn number 14 and the third one from Finland. So maybe a brief applause for that and for the Nordic Fintech.
Absolutely, yes. What do you think, Ville?
No, this is a fun thing. I mean, obviously, a lot of people already use things like Airpassi to pay for their food with Volt. But now Volt is going to have their own directly competing solution embedded within the application. So there's a couple of things that will disappear in that sense. So I bet that the checkout experience with the Volt benefits payment is going to be so smooth there's no competition on the Volt app. Everything else is going to be very cumbersome. So for instance, if you try to pay with Airpassi, it will redirect you to another application, and then you need to enter the PIN code, and then you need to make sure that you have enough preloaded money in the Airpassi wallet if you want to complete the purchase. Volt will make all of this disappear, so they're gonna have a direct pass-through of the payment, so that the benefit part is paid from the benefit part, but then the remaining is automatically taken from a card that is linked to the account. So that's already, as a user experience, much better. They're also saying that the companies that are giving out these benefits will not need to preload the money to the benefit accounts every month, like the traditional ones do. So this is a direct pass-through for the companies as well. So it's a great benefit, because ultimately you don't have to basically pay out prepay these things into the wallet, and rather keep the money until it's actually used. Gives a real-time visibility into the liquidity that you have tied up into these benefit programs. There's a couple of things that I didn't find in the news. So they mentioned the card. It's a virtual card and a physical card, but is it a real payment card? Is the Visa MasterCard like the ones they use in Sweden, for instance, or is this completely closed-loop proprietary card that they have in here? So again, that was not disclosed in this news. The other big part to me, the other big question is that how do they actually make money with this? I mean, if they're not going to be charging, at least for the first year, from the merchants, again, a very well-established business model for these benefit companies like e-passi. If they're not going to do that, for now at least, then where is the income coming from? Also, if they don't get the preloaded money into the benefit account, it also means that they're not able to get the float or the yield on those deposits in the same way as these traditional benefit companies do. So that's already 2 income streams taken away from this model, which is kind of raises the question that how are they going to make money out of this? I see the obvious synergy benefits of having this very smooth payment instrument as part of the Vault portfolio, and maybe get the synergies across somehow. But as a standalone thing, it seems to be a loss-making thing. But anyway, we are probably missing.
But actually, just noticed that Klarna entered Vault as a payment method quite recently, at least here in Finland, and they have a campaign. If you pay by Klarna, you get a €3 discount. So they're neither making any profit there, but they are kind of aggressively entering the game with hefty discounts. So clearly the fight is on, and then in a long run, someone will start making profit for sure. But
is this a traditional kind of grow until you break kind of thing, and then if you're kind of buying the market and then hoping that you're able to turn it around once you're big enough? Maybe.
Well, they already killed Foodora, so yeah.
Yeah, true.
But loads of fintechs start like that. They have to subsidize the market to be able to get the growth, and then they hope that they can convert that later. Airbnb did the same. Uber did the same. You start with a potentially loss-making capability to undercut everybody else, and then hope that you can actually build on that later. So it'll be interesting to see where it goes. The other thing that I'm wondering about, Ville, when you talk about preloading with e-passi, I don't actually know whether the physical liquidity is preloaded or whether it's just an agreement that the corporation says to e-passi, we will satisfy this certain amount at the end. Because does e-passi retain the balance if you as the employee don't use it?
Yes.
Which is an interesting question.
I mean, that's always been my assumption on the business model. So again, hopefully maybe we can get somebody from e-passi to answer these questions into the podcast even, but my assumption has always been that that's part of the business model. Basically, the companies pay upfront all the balances to e-passi. E-passi distributes that to the wallets, and then they spend it. And if they don't spend it, e-passi gets to keep them. I'm sure there is some kind of a payback agreement, but I would assume that the payback comes with a hefty fee. So maybe you lose 20%, 25% of the unused balances or something like that at the end of the year. And again, that's why it's so fantastically profitable business traditionally. But now it seems like Vault is coming in and trying to buy the market and maybe disrupt it. So at the end of the day, this is good for us consumers or people who use these kinds of benefits, because I think the more fees we take out of the system, the better it's going to be. So let's hope for the best.
We will see. And we are rapidly running out of time. In actual fact, we are stupidly running out of time, and we want to do the joke. So let's accelerate this to the end here. Janne, do you have a joke for our listeners?
Yes, I have a special joke. I pick it up regarding what unfortunate events happened in March. So are you ready?
Always.
A regulator once audited Chuck Norris. After 2 years of paperwork, 400 evidence requests, and 3 follow-up visits later, the regulator became compliant.
I love a good Chuck Norris joke. So yeah.
Wonderful. That's a perfect way to end another beautiful podcast. I hope all you listeners have stayed with us to the end. If you have, then as usual, please hit the like button. Share this with 3 of your friends so that we can grow. And whilst you're at it, hit the subscribe button and leave us a comment and let us know what you enjoyed and liked about this episode. Or maybe what was your highlight from the newsletter from Fintech Farm for this month. As always, we will be back in 2 weeks' time with another episode. But until then, this has been Fintech Daydreaming.
This is Fintech Daydreaming.